Thank you so much for those of you that have purchased this DVD. I really hope that it's going to help you through your studies and hopefully save time and hours when it comes to accounting. I think one of the really awesome things about accounting is that you are able to just sit with the work, and if you understand it, it really cuts down on your studying time. You don't even have to go through a million examples. If you understand a principle, if you understand a definition, then you're definitely set to go. So this DVD is here to help you. You know, you can't always rewind your tutor or your teacher, but you can rewind this DVD, pause it at any point in time. I have added notes for you, but what I want you to do is, as you go through the DVD, add your own notes. I have given you some space where I've got examples for you to be able to sit down and to also answer your own little additional notes that you have. It's very important that you understand your basic accounting concepts, as well as that magic accounting equation, which unfortunately you will not run away from, because it forms the absolute basis of the accounting that we do. Remember that for any type of business that you have, the first thing that you want to look at as an owner, even if you have the business idea, you want to make sure that your business idea is profitable. So the goal of any business would be to maximize your profits. And in order to do that, you do need to keep records of your expenses, keep records of your income, so that you can know if the business is making a profit or a loss, so that you can look at areas where you can save on costs and look at how you can increase your revenue as well if need be. So the famous accounting equation, as you know it, is assets is equal to equity plus liabilities, right? Now, for our example, we are going to use a business called Pimp Me Clothing, right? And this is owned by Mr. Greg Kasim, and he's in the business of selling clothing for profit. Gregory has a decision at the beginning of this business, right? He wants to buy some assets, so he could have computer equipment. You could possibly have a delivery vehicle, depending if he's importing that clothing, or if he decides to buy it from a supplier that's a little bit far out. He could maybe buy a desk as well, and I'm sure a chair will do. He wouldn't want to stand the whole day in his office. So these are the assets in the business. And then furthermore, he can decide how he wants to fund those assets. He can take of his own money, which we will call capital, to buy those goods, right? He can generate income in the business to be able to fund those assets. And another way that he can do it is he can either go and take out a loan at the bank, or get outside investors or lenders, should I rather say, right, to invest in the business. So this would all be part of liabilities, right? It's what we owe outside parties. So assets can be funded in two ways. Can be funded through what we call equity, which consists of capital, income, as well as expenses. Or it could be funded through liabilities, which is your loans from the bank, from third parties. Maybe you buy inventory and you don't have the money for that, so you buy it on credit. So that becomes a liability for you as well in terms of creditors' control. You can add bean counter onto Mixit at 0799018556. Also, if you are one of those avid Facebookers, you can add or like the Bean Counter series page and add it onto one of your groups. And hopefully I won't be one of those that stalk you, but as I do find it useful to maybe add a topic for you, I really want to help you where I can. I will, so you can check that out. You can also drop me an email, tutor@beancounterseries.com So I don't want you to picture a lecturer or even a teacher in front of you. I'm just a tutor trying to help you.